Well, good morning to you. And thanks for joining December 13, 2023. We had the latest set of data come out on Friday, and I did a report, sent it out to members over the weekend, and I thought it'd be a nice time to delve into that data and take a look at what we can extract from it. All right? Good stuff. Well, as we always start, one of my alarms. Beautiful. Beautiful. Just give me one moment before we start. All right, I'm back. Sorry about that. Okay, so let's take a look at the data. Here's the latest set of data that came out. Here's a snapshot of that data, as we always like to start off by looking at. And like I've said before, I like to start off by looking at the change column. Okay, that's a comparison of the previous data with this past week's data. And we're going to look at the numbers here and see which ones are the largest ones. So immediately what comes to my eyes are these two here. That's bonds and the Dow Jones, okay? And then I look up and I see this one right here, which is the pound US dollar. And then up here, 32, and that's the Aussie. Everything else is, you know, nothing extravagant. We have oil. Was it oil here? Let me see. No, S&P, sorry. S&P 500. We also have bullish 39,000. Okay, so those are the things that stick out right away. Very bearish bonds. Bullish the Dow Jones. Bullish the S&P. NASDAQ wasn't as bullish. If you take a look at the NASDAQ number, it was 3,802, the difference, okay? So not that bullish. A pound a little bit bullish, Aussie a little bit bullish, okay? That's what sticks out. All right, so weak bonds, strong market. And we can see that the market has definitely been strong. Gold, so what do we got going on with gold? Now, we had a massive rally. A very strong rally that took place, okay? And it pretty much hit our target and came reversing back down really aggressively. When we take a look at the positions held by the institutions, we can see that they're super aggressive, okay? So there's no doubt that they are bullish. The banks are bullish gold. But here's the thing. When we look at the coloration of the cells here, we can see that they used to be red. Now they're entering into neutral territory. They're creeping out of neutral territory, slowly heading into bullish territory, but they're just not there yet, okay? And that's the key thing I want you guys to remember. They're just not there yet, okay? And that sentiment really, really tells you what's going on with gold. Not only is the chart and the formations or the lack of formations technically are telling us that they're just not there yet, but even the CFTC data is in line with that, okay? So the coloration of the cells here is telling us that they're somewhat neutral, but slowly creeping into bullish territory. Shorts, they've been declining their positions since October, 148,000 down to 85,000, and longs have been increasing, okay? We're just not there yet. We're waiting for them to produce some sort of sustainable structure so that we can pile into long positions, because over time, there's no reason why price wouldn't go up. All right. It's just we need the proof that they're going to push price up. And right now, they haven't provided us with that proof. Okay. So we wait. Oil. Look at shorts. Look at 180,000. That's aggressive. See how we went from the coloration of the cells from blue, and now look where it's at. Okay, 180 right here, 180,000. Pretty aggressive, right? And that was coming as this candle was consolidating here, and then we've since seen the drop in price. Now, look at the coloration of the cells here. You see how we went through a transition where their positions were bullish. We slipped into neutral. And what are we starting to see now? Just a tinge of bearishness. Is just a tinge of bearishness good enough for us to short? For me, personally, no. I wouldn't just short based on the coloration of the cells. Otherwise, I mean, I would also be looking for proper structures to be created on the charts. And right now, we don't have that. Okay. Price is sitting in between a demand here and a supply zone here, right? And on the lower time frame, there isn't any demand zones that have been created or supply zones that have been created that is of interest. The latest area we had was a supply zone on the daily chart, which facilitated a move to the downside. Okay. But in terms of any sustainable move that can be produced from this chart, it's not there yet. Okay. The bias is bearish because we see the coloration of the cells. We see them increasing their shorts. But if we're going to take a short position, we'd want something strong to be created in terms of supply on the charts. And that just hasn't been created yet. So we're waiting on the sidelines when it comes to oil, okay? US dollar, longs, nothing special. Shorts, very cooled off. Coloration of the cells here, they have been bullish for quite some time, since the mid-September. But it's, similar to oil. We have a major zone here, okay? And look where price is located. It's in the middle of those two areas. So if you want to guess what direction it's going to head, if that's what you want to trade, you could do that, but the odds are not in your favor that price is going to move in a certain direction, okay? So I'm not trading the dollar right now simply because, there's nothing of high quality at this point, okay? But there is a bullish bias, okay? That's important to recognize. So let's go over to Aussie. This one's a mess, okay? They've been short, removing shorts, adding shorts, removing shorts, and their latest push was closing off short positions, which is what fueled this move to the upside here, okay? So I'm not touching Aussie because I don't like what they're doing constantly with the short positions. It doesn't make for good trading, in my opinion, so I just leave it. USCAD. We had a drop after they accumulated an aggressive long position here, and then profit taking. Okay, that's what's happening here. Profit taking. You see, from 89,000 down to 77,000. Profit taking on long positions is what's fueling this move to the downside. It's not that they're adding shorts, because look at short positions. Since contracts expired back on September 19, they cut their short positions in half, and it's just been sitting like that ever since. Okay. Now there has been a little bit of a bullish bias here. Bullish bias, but they're closing their long positions from the highs. So it's not an ideal situation to be trading USCAD. Okay. Buying is not the right thing, even though the bias is bullish. It's not the right thing to do because of the fact they are taking profits on those long positions. Okay. And that's what's fueling the move to the downside. So for me, again, there's nothing high odds here, okay? So I'll just sit on the sidelines when it comes to the USCAD. US Swiss, ugly chart. One interesting thing that I had pointed out was this supply area here. We had supply, price was dropping, but when we took a look at the positions, we didn't see them accumulating shorts at that supply area, okay? Which led us to suspect that, this was not supply, okay? And if it's not supply, that means price can easily come back and trade through it, all right? So price immediately came back up, so this area is not supply, all right? But it's also this chart. Look at the chart, okay? Does this look appetizing? When you understand supply and demand concepts and principles, you can see that this is not a good chart to be trading, all right? And I know it's a little bit frustrating. You're sitting on the sidelines, not trading any high probability trades, but I mean, it comes down to whether or not you want to take a trade that is high quality or not. I mean, not to say that there's not going to be lower time frame opportunities. Sure, you could find lower time frame momentum kicking in on 1 hour chart, 15-minute chart, stuff like that. But in terms of a longer sustainable move, there's nothing that I see on this chart that's appetizing. Euro. So this is a big one, guys, right? This is a big one. Because I mentioned yesterday in the Telegram channel, if you're not a member there, you should join us. I share a lot of insight regarding the market, stuff you won't find anywhere else. All right? Totally different perspective on the markets, based in reality, the reality of the markets. So here's the deal with the euro, okay? I want you to listen carefully. So right now on the monthly chart, we have a supply area that has been contacted, okay? And what we know from studying charts and different formations, when we have price in a range as we do on the monthly chart, what typically happens is we get a move to the downside, it stops, it pauses, it rallies, it stops, it pauses, and it drops to the opposing demand area, okay? That's what typically happens. Now, I'm not saying that's what's going to happen on this chart, but I'm telling you this is what typically happens. And the reason why I'm telling you this is because that's a storyline. It presents a storyline, okay? That means something is in play. Something is potentially in play, I should say, okay? Something is potentially in play. Which means, remember when we had this pause? And I told you at the end, I told you last month, let's wait for this month to end because they're likely creating basing. And then there's likely going to be a breakout to the upside. And that's what we got. And now we're pausing. And the next move could very easily be a move to the downside. This is what the odds are, okay? When you're thinking about odds, the odds are over multiple months, price will drop. So you got to think about, the time frame we're talking about. In yesterday's level 2 class, we talked about the importance of time frames. Extremely important. Because multiple months, right? You could have 1, 2, 3, 4. This could be 4 months. Okay? So just think about this storyline and how it would take at least 4 months to play out. Then you go to the weekly chart. Each bar represents 1 week. So 4 bars would typically be a month, right? Well, what do we have here? We have a demand zone. This is a demand zone, okay? And when you look at the positions held by the banks, you can see that there was buying taking place here from the banks. All right? Okay. So let's remember the storyline that I just talked about here. That will take at least 4 months to play out from where we are now. Remember when we were saying basing and then a move up, okay? That move up, there was demand being created. Why? To facilitate the move up on the monthly, okay? So, question is, If this demand was used to facilitate a move upwards in order for us to get to this point so we could base and then eventually move to the downside, how is it that the banks are going to respond to this area of demand now? Okay. If the overall storyline was that price was going to move higher like this, then we would suspect that this demand area would be used to facilitate a move like this. Okay. And there's things that we would be looking for on the lower time frames that would indicate to us that the banks are indeed accumulating a long position from that demand zone. Okay. But here enters something very interesting. What we've been watching with respect to the positions that the retail traders are acquiring, at the very highs, the banks lured retail traders into, let me show you, it's best that you see it with your own eyes. Here we go. Okay, you've seen this chart because I've posted it several times. Right here. Okay, now this is that move upwards that we just talked about. Okay, institutional demand being created on the weekly time frame, which caused price to get up here. All right, they lured retail traders into shorting very aggressively up here. And when they got to the point where they couldn't hold any more shorts, they started switching those shorts to longs, and there was reasons why. Okay, there was news that came out, data releases, and so forth. And so retail traders, they bailed on those short positions and they started piling into long positions. And that is when the banks push price to the downside. Okay? And you can see the banks, increase their long positions by looking at the CFTC. So they bailed on those shorts. Banks got into short to ride the wave to the downside. And they were starting to accumulate pretty aggressively, got up to 71%. I think they even got a little bit more, 70, 71%. And then guess what? NFP came out, which was positive for the dollar, negative for the euro. So what do you think they did? They bailed on those long positions. Look, 71%, 70%. Look, bail, boom. Right after the drop here, they bailed. They're like, oh, okay, I'm not going to go long if the NFP just came out negative for the euro. So they bailed, okay? And that's where we're at right now. Important to recognize that, okay? They bailed. And this is as price is contacting this demand zone. So as far as I see things, what's taking place right now is two things. One, on the higher time frames, we have significant supply that came into play, pushed price down. So far, this behavior is indicating to me that this range situation is playing out. Okay? What we typically see in a range is playing out. Okay? So that leads me to suspect that this demand that was created here was used to propel price up here just to facilitate this area here being contacted before the move lower. Right? So if that's indeed what's going to happen, then we have to conclude that this area of demand over time will be removed. Now, in order for this demand zone to be removed, what has to happen? What causes price to drop? Well, we just saw it. When they lure retail traders into shorting, and they push price higher, and then they can't take it anymore, that's one of the times when price will drop. So they tried to lure them into longs. Well, they lured them into longs, and then the data came out. Then they offloaded their longs, retail traders, and now they're sitting around neutral, 50%, give or take. So what I'm watching for now is I want to see whether or not they're going to lure retail traders into shorting to set up an eventual move lower to remove this weekly area of demand, or if they're going to allow price to start heading up higher as a reaction from that demand, because they could be buying right now from this demand zone. That could take place. There could be some residual demand here from the banks that's going to cause price to go up. And then when price gets to the highs, something's going to happen to lure retail traders into going long. And then when they can't go long anymore, they will switch to shorts. Something like that is going to happen at this point. What it's going to be, I have no idea. What I do know is what to watch for, okay, with respect to what's playing out on this chart and with respect to what's playing out on the weekly chart. Weekly demands in play, that means medium-term pressure can be to the upside, okay? It can be to the upside, or we can see a pause here and the next move, drop. Okay, that could happen too. Or just a big drop like that. Or a pause and a move. There's so many things that can take place right now. Okay, we don't have an uptrend on the weekly. You know, this chart is a disaster. All right, it's a disaster. Zones are being removed. Trend lines are being broken through. There's no trends. There's no proper structures. All right. This is a weak area of demand. All right. So in terms of reading the supply and demand dynamics only, it'd be very difficult to determine the next move. But what I'm focusing on is the storyline. Okay. That's what I'm focusing on. Pounds, pretty messy chart, nothing going on here. Even in terms of positions, they added the last couple of weeks to their longs, which was before 43,000, which is nothing. And shorts, they just dropped them down to 54,000. Nothing going on here. Nothing important. Okay. Look at the long percentage, 55 versus 45. You know, nothing strong here. They used to be aggressive here. They used to be aggressive here. Now we're in between. So nothing really to see here. US dollar, Japanese yen. Let's take a quick look at that. After we saw that drop down into demand, which we talked about here, I told you they dropped price right into a demand zone, so expect some upside. And sure enough, we got the upside move. We see supply being removed, sending it up to the underside of the descending trend line on the 4-hour chart. And that's where we're at right now. In terms of the positions of the banks, they were aggressive with their longs. And then all throughout here, they closed their positions, okay? Took profits on longs, okay? They're not focused on shorts. So this big move to the downside, you know, it means nothing because there's no preparation, there's no indication whatsoever that the banks are expecting price to go lower, okay? They just took some profits on longs, which caused a move to the downside, and then the big spike down was about, you know, interest rates potentially being increased, okay? And it rallies or drops straight down into an institutional buying zone. Somebody's buying it again, okay? We don't know who because this data represents up until December 5th, and December 5th is right here, right before the drop. But in the next couple of weeks, data, we'll start to see what's taking place. And I bet you what we're going to see is them buying the US Japanese yen down here at the lows. Okay? All right. So, what else do we have here? That's pretty much it. That's pretty much it. There's trading opportunities. Like I said, there's trading opportunities on the lower time frames that you could take advantage of. But in terms of swing trades, I don't see anything viable, okay? When you know what constitutes a high probability trade, that's what you want to trade. And when you know the conditions of the markets are not good for trading, you will want to stay out, okay? If you're hungry for trades all the time and you can't wait, well, by all means, trade whatever you want to trade, okay? But me, I don't like to put my money into the markets unless there's something high odds. And right now, there's really nothing high odds from what I'm seeing, okay? Gold, you know, I had mentioned this last week, a short on gold, okay? That played out very well. I also mentioned a short on silver, which played out extremely well. Okay, those were short-term trades. What else we were talking about? US dollar, Japanese yen long. Those were short-term trades, nothing longer term. And that's it. There's a lot of things happening in the market in terms of the stocks, and a lot of dividend stocks that I'm in right now that are doing extremely well. And that's pretty much it. Okay, folks? So, and I hope you enjoyed it. Thanks for joining me today. And that's it. Until next time.